Good morning and welcome to Our Chicago. I'm Judy Sue. Inflation, rising interest rates, a possible recession, and geopolitical tensions all making this an uneasy time for the financial markets. As we wrap up 2022, what is the outlook for 2023? Joining me now is Chuck Carlson, CEO of Horizon Investment Services in Hammond, Indiana, and a contributing editor of the Dow Theory Forecast that a lot of investors have heard about. Good morning. Thanks so much for joining us.
Yeah, thanks for having me, Judy.
Okay, so first give us a quick 101 on what is the Dow Theory. How do average investors use it as a strategy?
The Dow Theory is a tool that's been around for more than 100 years, and it basically helps investors understand what the primary trend of the market is. That's the trend that typically lasts anywhere from 12 to 18 months, if not longer. And the Dow Theory rests on two things. It looks at the Dow Jones Industrial Average and the Dow Jones Transportation Average. Those averages represent important parts of the economy. And what you want to see are both of those averages moving in sync, hopefully to the upside. That's a bull market. Unfortunately, when they are moving in sync to the downside, that is a bear market. And that is what we have been seeing here over the last several months.
Okay, so as you know, many experts believe a recession is likely in 2023. What are your thoughts on that? What should the investors know so that they're prepared?
Yeah. If in fact we're going to go into a severe recession, the Dow Jones Transportation Average is the average investor should be watching. It is probably the most economically sensitive index there is in the world. And so if you see the Dow Jones Transportation Average, after the rally that it's had here in the last couple of months, fall and go back below its September low points, then the odds of a recession are pretty high. So right now, I think it's a bit mixed because of the rally we've seen in the Dow transports. But again, all bets are off if the transports go below that level, which is around 12,000.
What do you see as the biggest risk to the economy in the new year?
Well, there are three major engines of stock market performance. Those are interest rates, inflation, and corporate profits. I think the biggest risk to the market in 2023 is how persistent will inflation be, particularly wage inflation. Inflation is a real killer for stocks because it constricts on earnings multiples, which go to shrinking stock prices. The other factor to watch in 2023, which is important in every year, are corporate profits. And there's some headwinds because we're seeing corporate earnings estimates have been coming down rather sharply for the December quarter and for 2023. And that will probably present some headwinds for the stock market in 2023.
So I have listened to you on podcasts. I have heard you say that you want to always buy a company that has a lot going for it. But how do you find something that's of value when right now, you tend to see their stocks go up and down? I guess what I'm asking is, what are you buying in the new year?
Well, there are always opportunities in the market, especially if you're not necessarily concerned about what the market's going to do over the next week or month or even in the next 6 months. And I think in 2023, there will be pockets of strength. I think some of the areas that have held up in 2022 will continue to hold up in 2023. And I think those areas include healthcare. I think you'll see insurers continue to do reasonably well in 2023. And then if investors want to start to dip their toes in some of the areas, such as technology, that have really gotten worked over pretty badly in 2022, I think that is okay. But I think they're going to have to show some patience with those buys because, again, I think you'll probably see, at least for the first half of 2023, some of the same type of volatility that we've seen here in 2022.
Okay, Chuck, your advice for someone who may be just starting out, looking at the markets and the volatility, maybe in their 20s and 30s, just trying to build their wealth right now. What is your advice?
My advice is basically what goes on in the market over the next week, six months, even the next 12 months, for somebody in their 20s or 30s is almost irrelevant. The biggest thing you need to be doing is harnessing the power of time, which is the biggest asset and the biggest power tool that you have in an investment program when you're 20s and 30s. So my advice would be start investing early and often, take advantage of the market declines by continuing to put money into the market. And you may feel like a dummy here over the next 12 months, but I almost guarantee you that over the next 5, 10, 15, 20 years, you're going to be awfully glad you did it. So the biggest thing for a 20 to 30-year-old is get started, get in, get the ball rolling, put money into the market and continue a process of continuing investing, because it will pay off for you over the longer term.
Well, here it is. Cheers to 2023. Chuck Carlson, thanks so much for joining us and for your insight this morning.
Thank you.
All right, Chuck Carlson, CEO of Horizon Investment Services. And coming up next, after a short break, we will take a look at the housing market in Chicago and also the suburbs and what could be ahead for us in 2023.
Hey, if you like that video, be sure to subscribe to our ABC7 Chicago YouTube channel.